What are the consequences of tax errors in Canada? I'm Caitlin Lawrence, CPA and partner at the Tax Force. Today, I want to discuss an important topic that affects many Canadians. Understanding these consequences is crucial for both individuals and businesses to stay compliant and avoid unnecessary penalties. Let's begin by defining what we mean by tax errors. Tax errors can occur due to omissions, inaccuracies, or misrepresentations on your tax return. This could be anything from forgetting to report income to claiming ineligible deductions to simple mathematical mistakes. Even unintentional errors can have significant repercussions. One of the primary consequences of tax errors is a reassessment by the Canada Revenue Agency, or CRA. If the CRA identifies discrepancies in your tax return, they may reassess your filing. This can result in additional taxes owed, plus interest on the unpaid amounts. Interest is calculated from the date the taxes were originally due until the date they are paid. In addition to interest charges, the CRA may impose penalties. A common penalty is the failure to report income penalty. If you fail to report an amount of income twice within a 4-year period, you could face a federal and provincial penalty of 10% each on the unreported amount. That's a combined penalty of 20% on the income you failed to report. Another serious consequence is the gross negligence penalty. This applies if the CRA believes you knowingly made a false statement or omission. The penalty is significant. 50% of the tax payable on the understated income or the overstated deductions or credits. This is in addition to the taxes owed and any interest charges. For more severe cases, especially involving intentional deception, there can even be criminal charges. Tax evasion is a criminal offense in Canada. Convictions can result in hefty fines, which can be up to 200% of the taxes evaded. In some cases, it can also lead to imprisonment for up to 5 years. Tax errors can also have long-term impacts on your financial standing. They may affect your credit rating if unpaid taxes lead to liens against your property. For businesses, tax errors can damage your reputation and undermine stakeholder trust. It's essential to maintain accurate records and ensure compliance to protect your financial health. So how can you avoid these consequences? First, always file your tax returns on time, even if you can't pay the full amount owing. Filing late can trigger late filing penalties, which are separate from interest charges. Second, ensure all income is reported accurately. Double-check all entries and consider professional assistance if your tax return is complex. If you discover that you've made a mistake on a previous tax return, the CRA offers a voluntary disclosures program. This program allows taxpayers to correct errors or omissions without facing penalties or prosecution. However, you must come forward before the CRA contacts you about the error. Thank you for joining me today, and remember to use the Tax Force.